At this point, allow me to recognize the presence of Dr. Stanley Mutenga, who is one of our presenters and an ERM specialist. We welcome you, sir. And maybe at this time also, let me just take the time to comment and say, would like to acknowledge also the presence of those people who are part of the actuarial profession outside Zimbabwe, in as much as the pandemic has resulted in a new way of living, where we're working from home, we can't get out. It has got its own advantages, where we have resorted to this virtual way of doing things. This has even meant that we have managed to attend the convention, probably which we wouldn't have done if it was in an ordinary circumstance. So probably this is an advantage, and going forward, who knows? This could be a new way of doing things. So let's take advantage of what this pandemic has taught us, what it has forced us to do. In as much as it is negative, it may have some positive outcomes at the end of the day. Ladies and gentlemen, allow me to acknowledge our sponsors for this year's convention. Old Mutual Zimbabwe, who is our platinum sponsor. They have sponsored the proceedings of this convention, together with sponsoring students from NAST and UZ to participate in this convention. Thank you so much, Old Mutual. We would also like to acknowledge Coronation Consultants, who is our silver sponsor for this year's convention, together with Pentact and Zimbabwe Actuarial Consultants. We thank you for your sponsorship, and we hope that you continue helping and supporting the works of the Actuarial Society of Zimbabwe so that we continue moving forward. Ladies and gentlemen, welcome back to the next session of our convention. The next presentation will be on economic overview by Shelton Sibanda from Imara. Shelton is the Senior Portfolio Manager for Imara Asset Management Zimbabwe Private Limited, the largest independently owned asset management firm in the country, with a primary focus towards management of the investment portfolios of institutional pension funds, corporates, and high net worth individuals. He has more than 9 years experience in the financial markets, specializing in portfolio management, macro research, financial analysis, and equities trading. Shelton obtained the right to use the CFA designation in 2016. Furthermore, Shelton is also a member of the Institute of Bankers South Africa, a leading specialized body for financial services professionals. He is currently an executive committee member of the Association of Investment Managers of Zimbabwe, a body representing the interests of all registered asset management companies in the country. He is also a non-practicing member of the Zimbabwe Stock Exchange, and is married to Rumbi, and they have 2 beautiful daughters. I think his presentation is going to be a very interesting one, given what is currently going on in Zimbabwe. So I believe everyone is looking forward to hearing Shelton's presentation.
They're worried about a W-shaped recovery, where you really have a dip and then a recovery and another dip again. I think for Zim, there's really quite a debate about whether we are going to have a U-shaped recovery, or ours is J-shaped. I am leaning towards a J-shaped recovery for the reason I mentioned before, that already when COVID did come through, we were already down there. Yes, we continue to go down maybe, but I don't think we can say we are in a U or a V-shaped recovery. Ours is going to be leaning towards a J shape. So what's going to happen is we are going to be in here for as long as it takes until we sort out issues related to the economy. But on the COVID front, I think the important issue is whether we're going to have a vaccine or not. Lockdowns, as we've seen, they try and reduce the spread of the disease, but the important thing is whether we're going to actually have the vaccine or not. So when the minister made his revised growth projections in the midterm budget, I think it was also just before we had this heightened infection rate that we're currently experiencing from COVID. So I think his numbers were really based on tourism and manufacturing. But I feel that those 2 sectors are going to be hard hit, especially if you look at tourism. I think this whole year is going to be a write-off, especially if you think of international arrivals. I think we can write those off altogether. The envisaged recovery from tourism was expected to come from a domestic tourism. There was already a big push towards really marketing Zim to locals. I think again with this lockdown that we've had, that is going to impact domestic tourism, but more importantly, I think it's more issues to do with affordability. If you look at most of the prime resorts or the prime areas where most tourists would love to go, I think those are sort of prized out of the reach of many Zimbabweans, and added to the shrinkage in terms of disposable incomes, tourism is really going to suffer. Again, at a high level, international relations, I think for most of us, again as well, the letter that the minister wrote requesting aid from the multilateral institutions might have caught our attention. But even just before that, there were a lot of issues that were happening insofar as our re-engagement was going on. There were two things that happened. The first one being a staff monitored program, which we had last year, quite an accelerated one, which if we had successfully concluded that, might have opened avenues for us to access or get some funding. And then in the last 2 or 3 months, we've had the Article 4, which was finalized. Both documents in terms of the finalization really point to a Zimbabwe that is not going to access or not going to be able to get any funding. And the issues again that were being mentioned there are issues that are largely within our control, especially related to money supply, to governance issues. Our international relations, there's still a lot of work that we need to do, especially around economic re-engagements if we really need to get or access to some funding. More recently, I think it was last week or so, there's quite a big issue that happened around farm compensation of commercial farmers. That's really an important step insofar as trying to re-engage. Obviously, the issue there is that adds on to the US $10 billion plus we're talking about in terms of for the public debt. How are we going to fund that is a big issue. One of the issues that we've not been talking about in most of our discussions out there is the issue around legacy debt. A quick recap, the legacy debt as those debts that remain outstanding, some of them relating to suppliers, some of them referring to dividends that are stuck in the country, and also issues related to air transport and all those issues. So a quick recap there is that government, or through the RBZ, asked companies to bring in whatever was outstanding after a verification exercise, and they needed to bring in a local currency equivalent, which once they've done that, the RBZ will take over the debts that are outstanding. This last week, I think I spoke to 3 different companies, one a banker, the other one in the manufacturing sector, and another one really a conglomerate. The mechanics of the legacy debt will certainly increase our outstanding public debt, but there is no straight application so far as how this is going to be resolved. If you talk to bankers, I think they've gotten a bit of a preferential treatment because they have first sight of the funds, so they are able to tap into that. But for some in other sectors, there are 2 approaches. It's either you still have to go out there and look for the money yourself. Once you've brought it, the RBZ is still going to pay you an equivalent amount at the, now I think it's the auction rate, before it was the interbank. For others, they've preferred to be given the money themselves, and then they go out there and look for the US dollar. So you get the ZW equivalent. I think that is another area that we still need to sort of clarify insofar as the impact is around the increasing our public debts. The numbers that keep being thrown around are between 1.5 to $2 billion. So that's really important. The conclusion on the international relations front is that the ball is really firmly in our court. We still need to define how we are going to go around the whole arrears clearance modalities. At a very high level, and this is one area that I'm not a specialist in, it's obviously politics, but that does affect the macroeconomic environment. Obviously, the trending issue from a political basis is that the South African government has sent through or is in the process of sending through their special envoys as the diplomatic relations between the two countries are being looked at, and also trying to sort out what's going on. I think what I can say is there is a lot we can do on the politics, because that has a big bearing insofar as the running of the economy is concerned. There are divisions right across the political divide, all the political parties you can talk about. I think the key for me there is, let's try and find each other. The other issues around the exchange rate, money supply, and banking sector, I think I'm going to talk about them in detail in the next slide. So that said and done in terms of an overview, there's a lot we can talk about, but I think I'm going to zero in mainly on the operations of the Forex front, and also how that does impact inflation and all other facets of the economy before I just round up on the implications for the long run. The topical issue at the moment is the auction system. I think the technical word that we use there is the Dutch auction system, where you're really trying to reward or punish. I think that is the word they use, those that bid higher. If you are going to this auction system and you pay higher, you are likely to get it, but you might be punished when the average rate is a bit low. I think we've seen that happening, where higher bids get allocated and you look at and you compare it to the average, it's probably a bit lower. The idea there as well is, if you are keen to find some Forex and you also bid very low rates, you are likely not to get the Forex system. So the idea is for you to bid close as much as you can to the average for that particular day. The question obviously is, will our current auction system work or not? So we want to try and see how best we can improve if there is need for improvement, and how best we can work around tweaking the system so that it can work. What we really have to say at this stage, and we have to really applaud government for doing that, this is a significant movement from where we were, where we had a fixed rate of 25, to where we've allowed the rate to really be moving, even though it's on a weekly basis. I think that is commended. It really helps from a planning perspective, and also just really to make sure we find the right price for our currency. So what I've done is a quick comparison with other countries, other African countries that have had an auction system, to see how they've done theirs and how best we can also copy if there's anything that we can copy. And when I was just checking, I found Ghana to be a very interesting model for us. Ghana is relatively doing very well from a macro basis. That's obviously debatable, but they've come a long way. So one of the things that Ghana did from 1983 up to 1991, they also had an auction system. And Ghana had similar issues that Zim is facing, very similar to what we are facing at the moment, from a very overvalued exchange rate. Remember, we were initially at 1-to-1 and we moved on 1-to-25. And they also had a very active black market, a parallel market, where a lot of transactions were actually going on at. Now, what they did, they also came up with an auction system. And also initially, when they come up with their auction system, they also had a priority list, just like in Zim. But their system finally worked. And there are a couple of things that they did differently that we can learn from them. The first one was that they were able to align their fiscal and monetary policies. So these were very even. They were on an even keel. So both the fiscal and monetary policies, which is our AET Samora Machel, and what is happening at the Ministry of Finance offices, they need to be very aligned insofar as their policies, especially around money supply, and I'll explain more there. But also, more importantly for them, they were able to get significant support from several multilateral and bilateral institutions. But as you might remember, I just mentioned now that we are having challenges insofar as re-engaging the international partners, which means we are really on our own at the moment. So we will not have enough Forex. We will also not have enough reserves to try and support our currency. If you look at how the auction has been going on from the beginning, end of June, to where we are now, an average of 5% decline on a weekly basis is not good. But one hopes that down the line, we will be able to find some bit of stability. So that is really key if we are to get our Forex auction system going. But also we can improve on certain issues, especially related to transparency on the offers side. Yes, we can see the bids, we have all the statistics around the bids, but we want to understand where is this money coming from so that we can try and have more information. It helps boost confidence. But as it stands now, there's a lot of speculation. And as far as we can see, it does sound like the auction system at the moment is currently being oiled by money from the Reserve Bank. The structure is we have borrowed some money offshore and we are using that for the auction system. While this might be good initially for a price discovery mechanism, we need to create an incentive where we can bring in the exporters, who are the key people that earn the money, so that they can come and play. And you also have a varied, or you also deepen the market insofar as the players are concerned. So we need to improve there and allow other players, especially the exporters, to come in, not the Reserve Bank, because it also helps from a price discovery mechanism. So that's really one of the issues we can really improve on insofar as our auction system is concerned. But what is also important to note is that this is not going to change overnight. If we were expecting that there is going to be a stability or a convergence, I know in the last couple of months, or a month rather, we have seen a bit of a convergence from the between the parallel market rate and the auction system, the gap really reducing from 125 to about 80 and 100 or 105, somewhere there. That is quite good. But if you look at Ghana, this whole convergence took about 5 years for them, for the two rates to actually come together. So we must not expect an overnight convergence. It's a bit of a process. But for that process to really work, there's a lot of confidence we need to build into the system and improve insofar as transparency is concerned. Why the auction system has to work is that it has a really huge bearing on all sectors of the economy from a pricing basis, as I will talk about on the next slide. For most of us, we might remember that Zim once had an auction system, or an interbank system we had back then. The reason it did not work was that government decided to also come and participate in the market. And when government does participate, it does upset the demand for currency, it does increase, and also it increases the money supply. So if you look at the correlation, which I'm sure most of us here are aware of what it is, most of us are actuarials, yeah. The relationship between the money supply and the ZWT valuation is quite high and very positive, a rate of 0.99. So we've charted this from December 2017 to around April this year. You can see that the correlation. And what is happening on the money supply front has a big bearing insofar as currency devaluation is concerned. So we need to rein in on money supply issues there, which is why it was really concerning that in as much as the RBZ has now been giving us our weekly statistics, the last statistics we had for money supply, especially what we call base money or reserve money, they were concerning, and that over a period of a week, we had an increase in excess of $2 billion in reserve money. And reserve money is that high-powered money that me and you use on a daily basis. It is the money that causes inflation. So that is really concerning. We need to rein in on money supply if we are also to help the auction system and also just bring that confidence around. The other issue I want to talk about, Madam Chair, is really around inflation. So the question is, when you talk about inflation, which number are you looking at? If I'm to ask all of us out there, there's different issues that we look at when we talk about inflation. To someone, it could be more around the price of bread. To someone, it could be around the rentals money. So when you look at the aggregated number that we are given, close to 800% at the moment, does that number really make sense to the guy that is out there? I think that is the key issue there. So the point that I make here is that we might probably need to revalue how we look at our CPI and the ways that we use in calculating our inflation, so that the inflation we see or that we report there does make some sense. What the Minister of Finance did last month, and in terms of the inflation numbers they published, is that they've announced that there's a new blended CPI rate At this stage, Jess and the participants, I'm not really sure I understand how we can have a blended rate that brings in a US dollar component and a ZW component. I think the best way is to continue to have a Zim dollar inflation number and a US dollar inflation number, because the blended number we had was 480 something %, I think. But when you look at that, what does it mean to you? Because my thinking is when you have a US dollar inflation number, it's likely to be lower and probably negative, whereas the ZWL will measure what is actually going on. So it's really key that we work around our numbers and we improve, again, issues to do with transparency. So in terms of expectations, our inflation now is no longer the same old inflation that we're looking at. It's more of inflation that is replacement pricing based. So it's inflation, it's more of expected inflation. So you don't talk about inflation that happened last month. You are talking about inflation that is going to happen later on because of a very high level of indexation or increased marking to parallel market that is going on in the economy. So that is really the inflation that we have to look at. Again, it goes back to how we can work around or how we can tweak our monetary policy to really work around reducing our inflation there. One of the positives that have come out of the auction system is that there does seem to be a bit of a shortage in the RTGS in the market for now. When you dig deeper, it looks like this is coming through from the auction system, where if you use the numbers that the RBZ gives us on 18 million, 19 million weekly, average weekly, it means you're talking about 1.5 billion being sucked out of the system. But the question there is, when this money is sucked out of the system, the billion plus, does it get cancelled? I don't think so. It looks like it does get recycled again into the system. Yes, for now it might be tight, but has it been cancelled? Ideally, if it has been cancelled, we should be seeing prices coming down, even in local currency terms. But that has not happened, even though there has been a relative stability. But also, another issue there is that the shortage of RTGS is really related to what's going on in the banking sector there. I think banks are very reluctant to also release money onto the system because of the interest rates that are out there. They are very low and very nominal, and they probably don't make much sense. If you're talking of an average interest rate of about, say, 40% per annum versus inflation in excess of 20, 25% per month, if you are a banker, it really also doesn't make sense. But another issue also is related to the kind of the deposits that we have in the system. Those deposits, about 50% of our deposits, they are quite high demand deposits, which are transitory in nature, and it becomes difficult for you to plan and lend them. So that's why we're sort of seeing a bit of a shortage of RTGS in the system, and that is at the moment helping from an inflation basis. But is this sustainable? It does go back again to how we manage the auction system. And I think really here we've touched much. The main issue is we need to have very strong budget constraints to help us rein in on inflation in terms of an independent central bank, very strict budget limits, and stop imprinting of money, especially the base money. Why I continue to talk about base money is because the overall money supply that we look at is very distorted now, because there's a bit of nostros in there which are marked to market on a monthly basis, and that increases the overall money supply. So the ideal monetary instrument to look at is base money, which, like I said, increased by 2 billion in terms of the last numbers that we got. So there I'm asking domestic what? The civil servants have been getting what they call domestic nostros. For economists and most of us in here, when you look at the original definition of the word nostro and what it means, it's really different from how we as Zimbabweans are using it now. I think it's also maybe coming through from that Zimbabweans are really quite educated. So we're twisting and changing all these things to make them ours. Nostro is really an account that is held by another bank out there. So to then say you have a domestic nostro is a bit of a misnomer, or an oxymoron, if I could use that word. So what has happened is that the government has promised civil servants, I think they've received the first batch and across board $75 US allowance. And the first thing that they say that it is COVID related, I think they say it's going to be there for 3 months. I do not agree that it's going to be there for 3 months. I think once it's there, it's going to be quite difficult to actually remove because civil servants have that expectation now. But it also makes it difficult for banks to really plan insofar as even issuances of cards or issuances of any other documentation related to that account. Why would I issue a card for an account that is going to be there for 3 months? So again, it talks to issues around long-term planning and having a very consistent and having consistent policy. Now, but that is not the key issue here. The key issue is, in my view, I do not think whatever the government has given the civil servants is real US dollars. And this is likely to probably create some challenges for us in the future. The same way we had the challenges based from the bond notes and the RTGS currency, which we then became our formal currency. What government seems to have done, in my view, is when they were having discussions with civil servants that said, we want a US dollar allowance, we want to be paid US dollars. So government said, fine, you want US dollars, we'll give you US dollars. But the US dollars are only going to be used locally. And before you even use those US dollars, you need to convert them to local currency. So if a civil servant, if a teacher gets his $75, for him to be able to even use that, he needs to convert it to local currency at the prevailing auction rate, and then he swipes either at Pick and Pay or TM or OK or whatever shop it is. So he's actually using local currency. There is no US dollars there. So you can see that we have added another currency into the system, which is a bit of a challenge. So what some guys have been doing is they would convert that money into RTGS at the 75.80 rate and immediately use that money again to find US dollars, which they can keep under the pillow. So you can see we already have a bit of an arbitrage in there. But the main problem we are seeing here is ultimately government is creating another currency, which might give us a problem down the line, like I said before, the same problem we had with the bond notes. It seems to be another rabbit that the government has just pulled out of the head to try and prolong the system. I think we could have handled this better. If government wanted to pay civil servants, they could have just increased their salaries in local currency, which is what they've done really at the end of the day. Because from a money supply basis, when you then convert that to ZWL, there is an increase in money supply. So this is another rabbit that they've really pulled out of the head to try and rescue the local currency and also pacify the civil servants. So in my view, what we need to do is, yes, we are in a multi-part currency regime now where the Zim dollar is part of the basket, but we need to have hard currency and also being backed by reforms. What we've been doing now is also not sustainable at all. A quick recap, you might know that last year we had made an attempt towards de-dollarizing the economy, where we wanted to bring back the local currency. But I think it's fair to conclude that in as much as we are in a multi-currency regime, or we've allowed the use of currencies on the back of COVID, we say it's mainly because of COVID. I also think where we are now, there is no turning back. So yes, government wanted to de-dollarize so that they can gain control over the macroeconomic policies. But if you see, we had not ticked the essential policies for de-dollarization. And as a result, that is why de-dollarization has failed. And that is why we are back in a multi-currency regime. And there is a huge risk that the local currency might not survive this. So if you really want to de-dollarize, the best way is for you to come up with a market-based de-dollarization instead of a de-dollarization initiative that is based on legal instruments and that is based on a cohesion, if I would use that word. So we have a bit of a challenge there. And that is why I still think de-dollarization is most likely to fail. Why I'm saying it's most likely to fail, it is debatable. We could think that we still have our local currency or it's done. But I think it's likely to fail because of all those things. Like if you see that we do not have a fiscal consolidation to stabilize inflation, the local currency, it means the propensity, it means the likelihood for you to also hold local money, and the desire for you to use local money is reduced. Does our local currency tick all the three boxes insofar as the attributes of money are concerned? Store of value, it probably doesn't do that. So we need to create policies that create some, that enable us to have some bit of stability, so that we can then later on, if need be, but it's not going to be easy, we can think of bringing back our own currency. So if you look at the policies that the government has done since last year, very few, if any, policies have been enacted that really encourage de-dollarization or that encourage us to have another currency. Most of them have basically actively encouraged re-dollarization. When government introduces the policies, they'll be thinking they are pushing people towards using Zim dollar, but in a way you would already be pushing people to actually not hold the Zim dollar. For example, the policies around restrictions insofar as the limits in mobile money and your RTGS transfers and ZPs, all it means is that the idea or the attraction for me to have or hold local currency is going to be reduced. That is why de-dollarization has failed, in my view. So at the end of the day, then the question is, what are the options that we really have in so far as looking at currency options? This is really a debate that we can continue to have, we can have out there, but you see that any currency option that we're likely to have or that we're going to have, we need a buy-in from the public. We need a buy-in from the users of the policies, or the people that you expect or that you're actually enacting the policies for. So if you do not have very high public confidence, it's actually going to be very, very low. Which is why we think any sort of currency that does not have a bit of foreign backing, that does not likely to work very well. I think the main issue again for around monetary policy, central bank that can make its own decisions without significant intervention from the political players. That will be a key thing. And again, like I've said, a buy-in. So my view is, at this stage, as controversial as it might seem, we need a bit of a currency board arrangement. Either we enter into the common monetary area, what used to be called the Rand monetary area, or we have a bit of a street currency board in the form of what Hong Kong had, to rebuild the confidence that is needed in the economy and in our currencies. So I think at a very high level, that is where we are. And I'll quickly then talk about what are the implications really from a long-term investment perspective. What does this mean for a long-term investor? All these issues we've spoken about, the key really being our currency and how we stabilize that. So a long-term investor is defined as someone who holds an asset for a relatively longer period. It could be an indefinite period, but the key definition there is that it is an individual that has the capability to actually hold that asset for too long. Yes, you might have the willingness to hold an asset, but are you able to actually hold it for a longer period? So that is really, in my view, the key differentiator between a long-term and a short-term investor. So a short-term investor will probably be in and out. They'll be investing next month or next week, next year they're out. But a long-term investor wants to ride the storm. So when you then look at Zim, where do we sit there? If you look at these types of long-term investments, equity, I think that's the most widely used one, mainly through the stock market. Bonds, yes, bonds. Bonds can also be used as a long-term investment. I think for most of us, we might have even forgotten that bonds are used as a long-term investment because of what inflation has done to us. We can have 15 or 20-year bonds in an economy, or even very longer-term dated bonds. You can hold on to Forex. I think a lot of us can identify to that. There's obviously property, there are commodities, gold being the topical one, and savings, which is probably related to Forex there. Bonds are quite a critical long-term saving that sometimes is forgotten, especially here in Zim, because of what hyperinflation has done. What hyperinflation has done is that it has destroyed all the confidence we had, either from the banking sector or from those that have excess money, because bonds from government ideally are supposed to be default free. They are supposed to be the best quality instruments around. But if those instruments have a bit of a default, not that government is not going to pay you, but in form of hyperinflation. Hyperinflation is a form of default, which also limits the attractiveness of long-term dated bonds. So those are basically at a very high level the sources of long-term capital that I've mentioned there. I think in Zim, the two topical ones are really insurance companies and pension funds. That is what most of us have become associated with. But the third one there, I talk about sovereign wealth funds, is an interesting concept, because the minister, when he came in, it was one of the things he was talking about, which I really totally support. How you can do it ideally, if you look at the developed world, I think the Norwegian sovereign wealth fund is the biggest in the world, in excess of $1.2 trillion. So how they do it is every year when they have a surplus in their government, in their revenues, they put aside something. But also we can copy other countries like Botswana, like Libya. Libya is actually in the top 20 or so in terms of the biggest sovereign wealth funds. We can put aside something around coming through from our resources, and we can build a sovereign wealth fund. And then the other ones, they're really endowments, foundations. We don't really have those actively here in Zimbabwe. But I have a question here. If you could just think for a second that where you are, do you think you take a long-term perspective in your investments, whatever form of investment, or you take a short-term perspective? Do you think about 10 years from now when you're investing? So the question I'm having is, do we as Zimbabweans, from all sectors, right across all sectors of the economy, suffer from a short-term perspective? Just a second to really think around that. And then you realize that whatever answer you get there is really dependent on what's happening in the macroeconomy. Because a short-term oriented investor is someone that likes to make decisions instead of immediate gratification. And that is how most of us are. But it's a result of the macroeconomy. You don't even know what it is going to be like in terms of next year from an inflation basis, from a currency basis. So as a result, we tend to focus more on the immediate flow of the market and economic news. That's why on a daily basis, like I mentioned at the beginning, most of us have become economic analysts. Most of us have also become political analysts, which ideally we shouldn't be worried about. We should be concerned about the long-term impact. Because if you're a long-term investor, you should be able to see any noises that are out there and identify relevant information so that you can make a decision. But I agree with most of us why we have a short-term perspective, because our macroeconomic environment is relatively not stable. So it makes it difficult for you to even plan. If you think about investing long-term, what sort of a discount rate would you use? You don't even know, because the longer the investment horizon, the shorter the discount rate that you would prefer a very shorter payback for investment. So issues around the economy and confidence are really important. The other limitation really why in Zim we're not able to look at a long-term investment from long-term investments is because our financial sector has really become very small. Because with each devaluation, as we have a currency devaluation, it means the equity, it means the funds that are available for investment, they become very, very small. Whereas the makeup of our economy from a manufacturing sector or from any other sector is that we need a minimum of 50% US dollars in terms of the inputs that we need. So really, in short, you realize that it all goes back to the macroeconomic environment, and also really talking around the confidence issues there. There is a key issue that happens, especially in our industry, that because of the quarterly reporting that we have, and also now corporates having quarterly trustee updates, we tend to be very short-term oriented. Trustees or the people that you really be managing assets for, they would want you to quickly get out if there's been a loss, because before they've suffered losses, they've become more sensitive to losses than to gains. So as a result, I think we need to relook around that whole quarterly reporting, because it makes people more short-term oriented. I think the final issue I'm saying is really, as policymakers, we need to be consistent. Policymakers should consider the unintended impact of regulatory decisions on investor ability to make long-term investments. I'll stop here, Jess, and I'll open it. I'll take some comments or questions from the members. Thank you.
Thank you so much, Shelton. I believe your presentation is one of the toughest ones, given what we're going through in Zimbabwe. And I see here we've got questions. Mr. Tichareva, if I can probably ask you to ask your questions, given that you've got 2 questions here, which are very long, I would possibly ask you to ask the questions in person, if you don't mind.
Okay, so Shelton, I think thanks for a very interesting presentation. I had asked my questions as follows. There are 2 questions. The first question is on consistency. Based on your understanding of what's happening, to what extent do you think the government, through the Ministry of Finance and the RBZ, are committed to stable policies that are sustainable over the long term? Since so far we've seen that they have been changing policies frequently and they've been more reactionary as opposed to being proactive. An example being the auction system that was previously ditched. Are they listening to you as industry experts? So that's my first question. Maybe you can take it and then I can ask the second question.
Okay, that's fine. Thanks for that. I think one is tempted to really have to think and believe that both the Ministry of Finance and the Reserve Bank or other policymakers have that willingness or desire to actually see the economy being turned around, to really see the country really moving forward. So I want to believe, I really believe they have that belief as well, and there's that desire to actually have the economy turned around. The other part is really around our engagements. We really do engage with the Ministry of Finance and RBZ through various platforms. As an industry, we have industry associations. It could be also through the regulator, various regulators, SEC, IPEC, either through the ZSE. So engagements are there, they're ongoing. So I can't really pinpoint exactly where the problem then does really come from. Because when you sit with Honorable Mtuli, when you sit with Doc Mangunja, even their team, and you have discussions, you really see that willingness or that keenness. So where it then falls off, I honestly can't pinpoint where it is, but I really believe in their desire to turn around the economy. I think they have that willingness. So one hopes it's not too late for us to actually do the right things. I think the next question was on the stability of the exchange rate. He's saying it's certainly correct to say we cannot eradicate the black market completely in the short to medium term. However, we also cannot allow the black market to control or drive the exchange rate, as was the case, which I'm sure the auction system is trying to do. I think my connection you just dropped the apologies. So I think the question I was addressing was around the black market, and I agree 100%. We need to go back to the formal system and actually have transactions going through there. But the main issue, like he's rightfully said, is really what you call speculation and manipulation. So from a finance perspective, speculators play a key role in terms of oiling the system. So the issue to try and understand is probably bordering on the legality or illegality of what you call speculators. What you would call manipulation, I'm not sure how we would define that. But if you go back to maybe a year ago up to where we are today, every time there seems to have been a significant movement in the rate, you could really track it back to an increase in money supply in the system. I honestly, in my view, do not think the ordinary guys out there the guys can really manipulate and move the rate. It is really significant amounts. And I think the Ministry of Finance and the Reserve Bank are sitting in a very good position to really see those kind of significant amounts that have an ability to move the rate if really that is happening. So I hope these so-called investigations that are going on will be able to pick or really figure that out. But based on really evidence that I can see, you can every time link the devaluation in the currency to actually an increase in money supply. So we're going to see them. Yes, I think for now, like I mentioned, the rate is really stabilized. You could attribute that to the auction system, which is fair enough. But the concerns I've had, which is the same concern I mentioned, is the auction system sustainable? Do we have enough money to really keep the auction system going? What policies have we put in place to make it attractive so that exporters can also come into the market? That would be really critical. So we need to give it some bit of time, another 2 or 3 months, to really see if it has been fully accepted. But yes, certainly there has been some stability, which is really appreciated.
Yeah, thank you. Thank you. I think you have answered me. Thank you very much.
I see the next question is from Emmanuel Pupa. It's saying, what needs to happen for us to have an economic turnaround which does not involve support from international financiers, IMF, etc., support in the form of additional lending? That's a very interesting question, Mr. Pupa. I think it's quite difficult if we are to be very honest with ourselves, because the role that is played by multilateral institutions is very critical in the running of any economy. It is not necessarily just the funding that you need from multilateral players. If you talk to a number of bankers, they'll tell you how important it is for you to have decent relationships from a correspondent bank perspective, and also really what is called the signaling effect. Even if you do not get money from the IMF or the World Bank or IFC, the fact that you are in a good standing with them helps you unlock certain doors where ideally you would not be able to go in and get some funding. So the relationship is certainly very important in that regard, because we cannot operate as an island. We still need relationships out there. And most players out there take a cue from the multilateral institutions.
Interesting. All right. Shelton, I've got a comment here from Wadzanai Piri. He says that, thank you, Shelton, for your presentation. You raised pertinent issues. You went in it in a basa to make Zimbabwe tick.
I think yeah. Yes, Jess, there is a question I also see from Justin Chinakizwa.
Yeah.
I hope I've not missed something at the top. He's saying, I completely agree that the more quarterly reporting that occurs, the more short-term the focus. It also increases compliance costs, which eat into the value that could be created. However, as you mentioned in one of your slides, what's not measured is not done. So it's really catch-22. I agree with Justin 100%. I think the balance we need to strike insofar as reporting quarterly and having a short-term focus is also having a very knowledgeable and diverse trustees pool that do not take their eyes off the long-term goal. Yes, in the short term, you could be having challenges, but the long term is always important. In that regard, I want to really applaud IPEC, Zimbabwe Association of Pension Funds, through the initiatives they've been doing to increase the knowledge or the qualifications of the trustees that sit on these pension funds meetings and the same guys that make the decisions. So it does help. So we need to strike a balance, because as the fund managers, there's also...
Okay, you back.
Yeah.
Okay, we'll give you a few minutes to conclude the last questions. I think we have got 4 minutes to conclude.
I think there's a question from Stanley there, which says, since government bonds are exposed to hyperinflation risk, is it not time for the regulator to reduce the percentage invested in prescribed assets from 10% in order to protect the policyholder value? Yeah, I think that's one of the topical issues that's going on around prescribed assets. But I think what the regulator has also done is to try and open up and say to the investing public, come up with various assets, come up with any other instrument that you can structure that.
It appears Shelton's network is a bit troublesome. Probably since the IPEC commissioner is here with us, we may ask you to pitch in on this one and hear your views as well, if you are happy to pitch in, Mrs. Muradzikwa.
Okay, thank you. Okay, I think if the question is with specific reference to assets, value-preserving assets, yes, I also want to confirm that I think our approach has been really to encourage the industry, to come up, with value-preserving assets which speak to the government strategic priorities, and I can assure you that I think as a commission, we've been very ready and willing, to consider, the various submissions which have been made. And if you approach us, as a commission, we do have a whole list of paper, value-preserving paper, which we believe is speaking to the investment priorities, of the various pension funds, which are ready, for the market. But, we do stand ready to give those considerations. And also, I think just to confirm that the government, in our view, has been very, very willing, to give those considerations. But, we've sharpened our listening ears, and we are listening, and we'll be ready to work with the industry. We appreciate the need, I think, to have value-preserving assets, given the hyperinflation and currency changes that we are going through. Thank you. I hope that's helpful.